Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Dennis Dick. Joel will be back with us tomorrow. The theme of the day has to be yesterday. What a way to start the quarter. Volatility galore. It seems like every stock, every chart that we look at is on the verge, if not already, having had a technical breakdown. So we'll talk about that. Pretty much just throw your third takers into the chat today, and we will break them down because every chart is looking like it's on the verge of a breakdown. So that'll be the theme of the day. We have some individual news as well. News from Allergan, news from Intel yesterday related to Apple. And we have some earnings, or not really, a couple ratings, but the theme of the day is mostly just on the verge of technical breakdowns everywhere you look. Our guest today, Nick Shaheen, he will join us at 8:35. He's the author of Create Income with Option Spreads. He'll give us some ways to play this market via some option spreads. Dennis, how's it going?
Oh, that was fast.
Oh,
that
sorry.
was fast. We didn't give us let's break down those markets there, Spencer. Come
on.
on.
What do you want? What do you want me to say? The S&Ps. Actually, I didn't even look at gold and silver this morning.
Yeah, bring up the S&Ps. Bring up the gold. Bring up the Bitcoin price. Come on.
We don't need the Bitcoin price anymore.
Is Bitcoin? Where is? I haven't even looked at it. This is how much I'm interested in Bitcoin. I haven't even brought it up in probably a week and a half. I have no idea where it is. Where is? Bring up Bitcoin first. Give Bitcoin some love here on Technical Tuesday.
I also have. Yeah, you said today would be a technical breakdown Tuesday, right? So that's, I guess,
that's not that bad. 7,300.
I would have guessed 6. Yeah, we're at 7,300. I would have guessed 6. All right. Bitcoin
Cash $689. Remember, everybody was telling me that was the next big thing when it was 2,400. Yee. Ethereum $400. That was like 1,000. And that Ripple, wasn't that like $3 or $4? That's 50 cents. Those are the big four. And then there's Litecoin. The Litecoin was the best one. That was when the remember the CEO or whoever had it sold all of his Litecoin out because he didn't want the conflict of interest. That was right at the top at 390.
Right.
Yeah, this party, I don't know. Maybe the party restarts sometimes, but looks like a lot of crickets happening there. Again, perhaps Jim Angel. This thing has whimpered out as he predicted.
Whimper indeed. So S&Ps, I mean, you kind of know what the deal with that is. Gold, we're at 1341.5 as I'm reading it right now on the screen. So what did we close at? What was our closing price in gold yesterday? What's today's date? Today's the second.
Down in gold right now. I always look at the GLD.
Yeah.
I don't look at gold futures.
Down in gold futures, down in oil, and everything is down. What isn't down, Dennis?
Well, I will tell you, though, the only thing, and I went through almost like JC Pratt style last night. I went through a ton of charts because I thought, well, you're looking here, the market's been killed. There's got to be some deals out there. There's got to be some stocks that, I want to stick in my long-term investment portfolio. And yes, there's some deals, but I tell you, the charts on everything do not look good. So when, you look at the overall, let's go to the SPY chart first, because that's obviously, going to be the overall market here. We broke through Joel's level of all levels. He has been talking, on the SPY equivalent would be about the 257, 258 area there, where we had 3-4 lows. We cut through that yesterday. The good news is we actually closed and almost closed above it. You're right there at the level. And the good news is we're back above that level here right now. The bad news is when you start looking at the individual components, a lot of them have looked like they've broken down too. So the question is, was yesterday's takeout of support a fake? So you say take down of support, a fake down, or or a breakdown, or a fake down? If it's a fake down, that means we need to get back above it. So the bogey for me today is going to be that support level once again. You could call it almost, let's take it to yesterday's close. We do not want to see this market go red. If this market goes red, and I think it's gonna, if this market goes red, let's say, SPY's a buck right now, 258.54. If it takes out the 257.47 low and starts going red, Katie bar the door, we're retesting yesterday's low of 254.67. And if it takes that out, we're retesting the February low on the SPY, which is, and my computer is acting up, 252.92. So you do have some levels in here. That's the good news. But then you start looking at individual components and stuff is breaking down. I mean, Citigroup yesterday made a new low on the move. Goldman Sachs made a new low on its move there. So the banks look technically like they're breaking down. You look at the tech stocks, it was a tech wreck yesterday. Amazon losing 75 points, makes a new low on the move. Tesla makes a new low on the move again. Did bounce at the level that we thought it might bounce, 244.59. We have been talking multiple times on Tesla about that. I'm just going out to the weeklies. There's that triple bottom. We had a 242 to 243. So we bounced just ahead of that. So that level still holds in Tesla, the 243 level we've been talking about. So that is an interesting setup still because we bounced $10 off of it. That being said, you get back down there, you take that out, then it's in trouble there once again. Twitter, TWTR, that's just kind of hung yesterday. Did not make a new low, but kind of looks like it's ready to break down too. Below 27.39, I think this thing's going to see $25. So as long as it holds 27.39, maybe you're okay. But it seems like in this market, it seems like mentality's almost changed. It seems like it's gone from buy the dip to sell the rip. We don't hold the rallies, and we seem to come right back down. So, and obviously, we've been talking about that for a little while here on the show that, we've been breaking down. It's been an awful couple of months really for the overall market. But still, when you consider, where we're at, we've really, still not retested the February lows. So the technician can still say, well, look, as long as we're above February lows on most of these stocks, we're still okay. Take out those Feb lows, and then we're really in trouble too. But I just don't like the sentiment. I don't like that we're breaking down on so many different stocks now. There seems to be nothing holding us up. There was always something, it always seemed like before when we've been in the 7-year bull market that whenever there was some stocks getting killed, there would be other stocks picking up the slack. I don't see anything picking up the slack. I don't even see defensive stocks picking up the slack. I mean, look at Kraft Heinz yesterday. Had a terrible day. Those sometimes move counter to the market, but KHC broke down. Kellogg's, was right there near the lows again. GIS looks like it's ready to break down again. I mean, this market doesn't even want to get defensive. It just doesn't want to own stocks. Gold really hasn't had that much of a rally either, considering, how bad stocks have been killed. You often see gold really start to catch a bid. Kramer always says insurance for your portfolio, because when the market gets killed, gold goes up. It's held up, but it really hasn't gone up much. I mean, we're still, well below where we were, really in the last 3 months. We're just still in a trading range. We're not breaking out as this market's breaking down. But, that being said, gold, if the market starts to break down, I do expect gold to still catch a bid. It's just showing you how much, the market is spooked here right now, because they're not buying any of the defensive names, and, they really are not buying anything.
Well, we're only about a week away from the next earnings season. The banks start reporting April 17th is when Goldman Sachs reports. They're in that first bunch with Citi. Yeah, Citi is the 13th. So we're only about a week away from that. So you would think that would be a catalyst to drive us higher. I don't know.
It could be. It depends if those earnings are good. Then it's all interpretation of those earnings.
Right.
If they're kind of got the negative sentiment going into the report, they tend to find bad things in the report.
Right.
So, that's the scary thing there too. If we still can't turn it around by then. I'm going to say though, I'm talking pretty bearish here on the show, but we still are above February lows. So that is the one good thing for this market. And most of your stocks, there's a few that are breaking down that are below February lows, but most of your stocks are still above where they were in February. So that's the good news. I mean, like a stock like Apple, some of your tech stocks are significantly above where they were in February. They just kind of look like this Apple chart. 165 was holding, 165 was holding. It cut through it yesterday. Maybe it's, it only cut through by 50 cents and it did close strong. But a lot of the reason a lot of these stocks closed strong is that we had a lot of buy imbalances on the close yesterday. It kind of pushed us up at the end of the day. Now we get a little bit of follow through. We're up another point here. But if I'm institutional money and I'm looking at this and I'm looking at the damage that was, at one point at 3 o'clock yesterday, we were really damaged. And you're thinking, you're getting back, a few hundred down points from the low of yesterday. I'd probably be lightening up. So I still think you got a lot of people who are sitting here with a lot of stocks in their portfolio saying, I wouldn't mind some cash just in case we start going down. And that money comes in at 9:30 and might put pressure on this market once again. So I don't think we're going to hold this gain here today. I think, we could rally, pre-market, a lot of retail, pushing price around, a lot of traders pushing price around, but it's institutional money that really pushes price, and they don't participate as much in the pre-market as the regular traders do. And that's why I think when the real money comes in at 9:30, that's going to be the tell. If they come in and we can hold yesterday's, or if we can hold yesterday's close, which was 257.47, then you got a case. But we take that out, that's when I'm going to get happy with the short button, at least in my day trading portfolio.
Is there anything that anybody wants to own out there? TLT?
I don't know. Ask in the chat. If you see some stock charts that actually look good, because like I said, I was looking through a lot of charts and I can't pull the trigger on anything really right now. I mean, obviously I own a lot of stocks in my investment portfolio still, but I'm sitting on a lot of cash. I'm probably like, I haven't analyzed it for a bit, but I bet you I'm up to like 25, 30% cash. So I would like to put some of that to work, especially at my age. You think, you're holding 30% cash, you're holding way too much. So a pullback would be good for me, and I was cash for a long time because, I just thought the market was overextended for a long time. Probably got to, been raising cash for the last year and a half, which has maybe, been the wrong move. But I just look here and I'm thinking, yeah, I'd like to own some more Google. I've bought Google and I've had basically my cost base is almost zero on Google because I've had it for so long. But, you look, it's a good pullback, it's a good company. Forward multiples 20, it's still growing. But then you got the wild, ness with, what's happening. Facebook's issues are going to be affecting Google as well. Facebook's just holding on. Facebook's another interesting from a valuation perspective. It's like 20 going forward. But if they start losing advertisers and start losing revenue, top number starts going down. That bottom number is going to go down too, which means your multiple is going to go up. So there's all considerations like that. The question is this the pullback, and are we going to continue this bull trend for the next 2 or 3 years, or did we just get too frothy and did we top out? And now, we're going to go into maybe a year or two of, where we don't do a hell of a lot, or maybe even pull back. So it's hard. The charts don't look pretty. I want a reason to buy. The charts are not giving me a reason to buy here.
Interesting data IPO, Spotify. So we'll see what happens when they start trading at 9:30 or 10. They're priced at, I was seeing $132 a share in Spotify direct listing. So this is a fun day.
No underwriters in this.
No underwriters.
And that's interesting there too. Citadel, a big part of that.
Yeah.
That's another story in itself. But, we'll see how that does, because often, you have underwriters that will support the price at least for the first trading day. But the underwriters aren't there. Right. This is different. It's the Citadel's a direct offering, like you said, from the shareholders here. So let's see what it does. It's going to be very interesting. Tough environment for it to come an IPO in. What about Dropbox? What's Zipit doing?
Yeah, I was going to say, well, the other ways to play Spotify today are GSVC and Salesforce. Salesforce owns a good chunk. They both own a good chunk of Spotify. What is DBX doing? So they're up.
We've had 5 trading days.
Yeah, we got 5 trading days.
6. So. And we got up there a couple of days ago, but we're looking like heavy here a little bit still too. Again, even that chart doesn't look that great to me. I mean, it's only got 6 days of data. Obviously, with Barry Hamsey, who comes on the show a lot, he doesn't even start looking at a stock charts until they have at least 90 days of data, because he doesn't have enough information for him to do his Sigma channels or any of his own technical analysis. So there's a point to be made there, but it's not rallying.
Right. All right.
Well, I guess it's a terrible tape, so maybe it's not going down either as much on the terrible tape. So maybe that's good news.
Let's move on. We did have some individual stock news. Let's talk about Allergan. They had some volatility around yesterday's, or right before yesterday's close at like 3:30. We had a Bloomberg report that Allergan was exploring or considering options for their women's health unit, which is valued at around over $5 billion. And you saw that tick right there just immediately and then right back down. So the algos are all over that.
I mean, I look at this here. This is headline news. Somebody just grabbing it. Boom, it went all the way up around to 168 on the headline. And then they're like, this is Allergan. You sell pops in Allergan. That's how it works. And everybody came in and sold it right back down. So, here it is right back down from where it came from, 162.27. Trading up a little bit here in the pre-market. This stock I own in my investment portfolio. It has been a dog. $170 is just absolute major resistance. So when it gets up to 168 yesterday, it would have been a nice sale for anyone. I just don't see any interest in this until this thing gets above 170. That's so much technical resistance up there. It's a terrible tape. So here I am talking. I'm sure I'm the only person that does this, talking against my book again on the street. But I'm talking against my long-term book, and this is stocks I'm buying for the long term. But right now, it doesn't look good. That 170 just looks like the Rock of Gibraltar up there. I don't see any reason to be jumping in this thing here. Not until it gets above 170. And it's going to take a market rally to do that.
One thing we were discussing on the pre-market show is, there are some interesting ratings this morning, but what tends to happen is you see, and this is the point that you were making, is in times of volatility, the analysts will take a back seat as if they it doesn't make sense to come out with a bullish or bearish note when the entire market is going down or going up or one way or the other, and it'll just make your thesis moot. So.
Well, yeah, Mondays and Tuesdays tend to be the busiest days for the analysts, especially Tuesday, because they've got the reports and maybe they're finalizing them on the Monday and then get them out there on the Tuesday. Ty, there's not a lot of analyst reports here right now, and the point that you just made, and it's a great point, is that when the market is this much volatility, if you're an analyst, just picture yourself. And so this is what I try to do always, as a trader too. I try to put myself in the other guy's shoes or the other participants' shoes. If you're an analyst, and you've got, this great, bullish report, on stock, and you think it's going to go up, but the market's collapsing. You want to wait till this market calms down. So you hold that report for a few days. It's like, because you don't want to issue, a buy rating on Microsoft, and the whole market is breaking down, and that's going to take your stock down, despite, your good fundamental thesis for a stock like Microsoft. So it's going to move around with the overall market more so than, your analyst report. And they don't want to, issue the report at 90 and then the market takes your stock down to 80 because that's making them look a lot worse. They'd like to wait on that. So they often wait until, the dust settles a little bit, get the volatility coming down. Now I feel safer issuing my report, and I'm not going to get run over by, a market that everybody wants out of. So when they see the Dow down 700 yesterday, there's a lot of analysts that might have had some, bullish reports ready to come out. They're like, hold those for a couple days. We might have to do some adjusting on those price targets if the market's going to, this full corrective mode for the next couple days here. So that's why, these days tend to be very quiet from analysts when you get a big move from the overall market because they're holding on to those reports.
All right, so let's look at some other charts, and let's do a little bit more than just casually mentioning them. So what charts were on your list that you were looking at late at night last night that you want to bring up on this? And then we can.
Well, you obviously bring up Amazon first, okay, because Amazon has had a rough few days. It got trumped. I mean, Trump is the catalyst that really started bringing the stock down, and it has not recovered since. The wild ranges in this thing, though, it's absolutely incredible. I mean, go back to Wednesday. The stock had a 90-point range. Then on Thursday, stock had almost a 90-point range once again. 90 points. And then yesterday, it had a 75-point range. Made new lows each of those days. So stock is still making new lows every single day. Stock's making new lows on the move. I'm not jumping in here with my buy button. So even though you say, hey, Amazon, great company, continues to grow revenue here, but valuation's always been ridiculous. But it's not a matter of, you can't value Amazon totally just on a PE multiple either and say, oh, it's trading 100 times earnings, the stock's going to go down. Because they reinvest so much of those earnings. They could make more money if they want to. They're not concerned about the bottom line, though. They're still just concerned about growing the top line. So you got to analyze it from a fundamental perspective a little bit differently. But from a technical perspective here, and that's what we've got in the short term here, and obviously, you got Trump, beating it down, it seems like every other day on them too. So you have that, catalyst there too. It's making new lows every day. So I'm going to wait until it stops making new lows, first of all, and then, go from there. But Amazon, I know it's trading up $8 here this morning. It's getting a little relief pop here. But, I'm just, and until we can not make new lows on a day, that's, when I look at, potential trade. But as the stock's made new lows 3 days in a row, I'm not going to jump in here and say, okay, it's not going to do that today.
Someone in the chat. I was going to say, yeah, go for it. What?
I was going to keep going through if you want to just go through even FANG, looking at FANG. I mean, Facebook held up yesterday. That was the good news for Facebook. You actually could argue that it put in a double bottom from the last 2 days. It actually did. 154.14, 154.11. And, and I've had people tweet at me on the show and say, what are you talking about double bottoms? They're looking at different time frames. I'm a day trader. So when I say double bottom, I'm talking about 2 days in a row that it's made a double bottom. People will say a double bottom is when you go down and then it comes back up for a few days and goes down and retests that. Well, that on the dailies, that makes a double bottom. But I'm looking, as a day trader here, when I see those 2 days in a row, me and Joel call those double bottoms too. So sometimes, the lingo that we use is different from maybe, some of the other analysts or traders on the street. But when I say double bottom, I mean 2 days in a row, it's made two lows the same day. And sometimes those are technical patterns that traders look at. So that's bullish for Facebook. If Facebook, for whatever reason, can catch a bid, I still think, Facebook is one of your market leaders here right now. Seems like Amazon has taken the reins to a certain extent because that's been all the talk. But Facebook here, there's still a lot of unknowns here. We know, they have, far from, figuring out, this whole data breach stuff. But it did make about double bottom for the last 2 days. So as long as the 154.15 can hold, then you could argue that, hey, maybe I nibble into something like this. So there's one that looks okay.
And what about Netflix?
Yeah, Netflix is just a disaster too. Same thing. This is scary. If you go out on the, you look from the last couple of days, made new lows last 3 days in a row. But if you look on the longer term, it's just the fact that it has run so far. I mean, let's go and put this in perspective. This was $100 stock back in October of 2016. So here we are a year and a half later. It is now a $300 stock. Valuation was extended for Netflix way back when it was $100, and valuation just hasn't mattered. But now you're getting to a point where, they're worrying a little bit about the growth investor coming out of this thing. Then value investor has no interest in Netflix whatsoever. Value investor has interest in Facebook, has interest in Google, might even have interest in Amazon if you're using different metrics. They have no interest in Netflix. Anybody who's doing valuations, it doesn't make any sense. So if you're sitting back a value guy like me, this is what I talk about when you get that gap between the growth and the value. If the growth guy doesn't want it and the value guy has no interest, that can equal a pretty good fall in the stock. And I think Netflix is at that point here right now where it looks to me like it could be setting up for a steeper fall. So I don't like Netflix chart at all. I'd rather look at the Facebook. I'd rather look at the Google here. The Netflix looks just, and it's held up not bad, but it looks like it's hanging on a cliff.
What about Microsoft? This one we haven't looked at for a couple of days.
Well, Microsoft is interesting, and we'll just bring it up here right now. MSFT, it did not make new lows from 4 days ago. It had the big upgrade from Morgan Stanley, which really helped it last week. I think that was maybe Monday or Tuesday, and the stock got up to over $95. But didn't hold that, turned in reverse, and now we're just kind of hanging there too. Microsoft is okay as long as it's above 87.08. If it takes out 87.08, then you think about the low of 83.83, which is back on February 9th. And we take that out, then we're seeing $80. So I would say as long as we're above 87.08, we're okay for Microsoft. Takes out 87.08, I think we're in a lot of trouble.
So it just seems like the lesson here is as long as we're above the February 8th, 9th lows.
Yeah,
pretty much
to an
it.
extent. A lot of techs are. So, the techs have held up better because techs had a bigger run since then as well. Stocks like Micron, obviously, and I do like Micron. And, this is one that I talked about that I said I would buy at 50. I probably should pull the trigger. And because that was my plan, I bought a third of my position at 60, which was obviously wrong. And I want to buy another third at 50 and another third at 40. So the plan is still there. I kind of like the Micron here, because, it is a value thing, but then, it was scaring me a little bit when we had Sean Udall on there and saying how cyclical the earnings are, and he doesn't think it's cheap. And then I'm like, it's hard. It's hard when these pullbacks pull the trigger, but I should do that. And I'm kicking myself a little bit right now for, not buying the Micron here when, this was my call here. If it came back to 50, I was going to buy. It has come back to 50. I think valuation makes sense here on Micron. I think chips, are not going away. I don't think we're, at a downturn in the cycle here yet. Maybe we are, but I kind of like it here. Just not so much as technical basis, but that's we go 40 to 63. You're coming back to the 50%. 50 is where we had resistance before. I mean, you could argue this as support. So a few of these charts don't look that bad.
What about oil? I'm looking at CVX and ExxonMobil, and they look like pretty identical just in terms of the balances they had yesterday afternoon. Maybe rotation, added tech. Forget tech. Tech is done. We're done with tech.
ExxonMobil can't catch a bit. And I bought some of this in my investment portfolio at 75. I'm down 2 points in it. I was going to buy some more at 70 if it got there. I think it's going to get there. I think ExxonMobil is going to test 70. Valuation, attractive on ExxonMobil. I mean, it's got a 4% dividend here now. I think it's safe. Chevron, CVX, same story. Its dividend is almost 4%, except that Chevron's a little bit more, expensive on a relative basis there. It's trying to hold on to support where Exxon is breaking down. I think Exxon is going to see 70, but neither of these charts look great to me. I mean, it just hasn't bounced much. Nothing has. But when we had the oil rally, the big USO rally there 2 weeks ago, ExxonMobil, Chevron really didn't participate very much. And, yes, they're big, and yes, they're moving around with, the S&Ps as well. But, it's not a good tell when, they're not running. Like, looking at the opposite end, ConocoPhillips, which is another big oil conglomerate, had a good week when the oil ran up. They really didn't. So they're just heavy right now. ExxonMobil and Chevron both look heavy to me. Both look like they have more work to do on the downside. So not buying those.
One Dow stock we did actually have news on from yesterday. This is from yesterday early afternoon. Is Intel? Apple is planning to move ahead and make chips, make its own chips for its Macs and not buy chips from Intel. I believe I read that Apple makes up 5% of Intel's annual sales. So Apple moving away from them. I was looking at Intel. I was looking at other Apple suppliers. It doesn't seem to be affecting the other suppliers this morning. But Intel, not great when you lose 5% of your sales.
What a gift Thursday's close was to Intel. And obviously I shorted Thursday's close, which I disclosed there. And, scalper blood me, I covered way too soon. But we had that ridiculous run up at the end of the day to 51 to 52. They came in with their selling shoes on yesterday, and they faded that in the first half an hour. That was all gone. But not only that, they sold that thing all day, and then the news came out, and they really capitulated it down to 47. So it was such a gift yesterday, that $52 to close on, or on Thursday's close at 52. And now we've broken down. Now we've technical damage down here on Intel. Valuation, this is one that the value investor is interested in. This is attractive. But it's attracted to me from a technical basis in the lower 40s. 42 to 44, I'll be like, yeah, you know what? I could get on some Intel here. Right now, it looks like some technical damage has been done. We don't know how much they're going to hit it off that Apple news. Never good news if Apple's going to produce their own chips and Intel chips aren't going to be in there, because obviously that's all, a lot of lost money there, potential for Intel. So I look at this thing as there's some unknowns there all of a sudden, and now some technical damage has been done. I think I might get a shot at 42, 44 bucks. I don't know if that's going to happen this week, but I think I might get a shot here yet. So I'm backing up on Intel, and I would be interested in buying this thing at $42. I think I'm throwing in my invest portfolio, but not at 48. I think 48, 49. I think I'm going to get it cheaper.
And Angie in the chat noting she's right that the move doesn't take effect until 2020 is when that.
But market projects all that out. I mean, they don't give you a break because this is not going to happen for a couple of years. The market is always looking ahead.
Of course.
So so that's why when the stock gets yesterday, yes, you can say maybe it's unjustified because it may not happen until 2020, but there's a bad tape. It's not good news for Intel. So yeah, you could say maybe that move was a little bit overdone yesterday, but there was $1 of fluff in there too. Don't forget that 51 to 52 move on Thursday, which I talked about on yesterday morning show. Those often get faded right back. So on no news, I think Intel was giving that back, and then you have bad news come out as well. So they hit a little bit harder than maybe they should have, but still, I look at this thing. It looks technically damaged too. That's the story. There's a lot of technical damage here.
You know what stock has been leading my pre-market scanner for like 4 days in a row? LFIN.
This is an ugly one. This chart is ugly. And it had this ridiculous run from $33 up to $74 in like a week and a half in the middle of March. And then in 1, 2, 3, 4, 5 trading sessions, now 6 trading sessions, we have went from that $74 high to $11.
Yeah.
To $11. I mean, this is one of those blockchain plays that just never got killed enough. And obviously in the last 6 days, they've taken it to the woodshed, and now it's been killed as well. So, this was one, remember, it wasn't this the CEO came on CNBC when the stock went from like 60 to 140 and said he didn't know why it was going up to there. I mean, the CEO was, this is how hot the blockchain stuff was. They got the CEO on there and said he didn't even know why the stock was this high. So, the CEO thinks it's ridiculous. It was ridiculous. And the market is so silly. So on those CEO comments that day, it dropped $20. And then the next morning, they rallied it all the way back, went up to like $80, $85 anyways. It was just ridiculous. This whole blockchain stuff is over. At least, these little pure, like, I don't think blockchain itself is over, but these little blockchain, plays on, the name, changing your name, that stuff is all done. So Alphin here, this story is just over here too for me. $11. Yes, you're going to have little bear market rallies, but I think when the dust settles, this thing's back at $5. So I think there's more downside. I don't know if that's happening the next week. Yes, you could rally to 20. The thing is wild here still, but path of least resistance, I think, on this thing is still down, believe it or not.
All right, 829. We got. Do you think we're going to have imbalances this morning, notable imbalances this morning, or is it just going to be all of the sell side?
Oh, it's always interesting. So 10 seconds, so we might as well just go straight to it and take a look here, because it's always interesting on, these big days. After a big down move, and we're down 700 Dow points on one time, there's always going to be some interesting parties. So we're seeing buy imbalances. So they're coming in. They're small, though. But they were seeing buy imbalances, which that's S&P's trading up. It's not surprising. Squares has 35,000 to buy, which is SQ. Pfizer 52,000 to buy. Alibaba 23,000 to sell. We'll talk about Alibaba in a second because it was on my list to talk about. Just go over here to some of the other ones. Berkshire Hathaway, which is Berk.B, 28,000 to buy. Coke 29,000 to buy, T 25,000 to buy, Verizon 26,000 to buy, CVS Pharmacy 33,000 to buy. They're pretty small. So I would say so far that's a non-event. There's just not much there. Let's go to the Alibaba chart here.
Yeah,
Because this is one.
They're buying the rest of L.me. So
what's that?
It's a company that they already had a stake in. They're buying the rest of it. It's a Chinese food delivery.
Okay.
They're valuing the company at $9.5 billion. So.
Okay, so I don't know anything about that, but I do know that this thing has some technical work here on the downside to do maybe yet too. I think eventually we're going to test 170. I'm interested in this one in my long-term portfolio, but still valuation is a little bit scary. But I just like Baba. I still think it's one of the better Chinese companies over there. And they got lots of support down there at 170. So as a trade, I think if I could get a shot at 170, I think you could bounce there at least the first time. Or 178 here. I don't know if we're going to get market carnage in the next couple of days or not, but I'd be ready down there near that 170 area for a bounce. I don't see anything at 176. I mean, yesterday's low was 175, 75, rounding to 76. I don't see much in there. I think there's more still work to do here on the downside. I think rallies are going to get sold here as well. So I think we're going to see this thing at 170 eventually, and that's where I'm interested in a technical bounce, the 170 level, because it's big.
Anything else on your list? We got 4 minutes until Nick Shaheen. So
there's always stuff on my list here, Spencer. We didn't talk Viacom here yet. There was a headline coming from CBS, and this one's interesting. Breaking, I believe, from Reuters last night, is that they are putting together their offer, and it's going to come in below market value.
That was interesting.
Yeah, so Viacom is getting rocked here this morning. It's down 6% in the pre-market because CBS has come out and said their offer to buy and merge the two companies once again, because obviously CBS came from Viacom, is going to be less than the current market value. So shareholders
but they didn't say how much.
They were expecting to get $36, $37, $38 offer, and they're going to get an offer less than $30.55 apparently from VIAB. So getting killed here this morning, this stock. I don't know, like if I'm really, on board with just slaughtering this thing though, because some of those media stocks really came back. Some of the other ones did too. So I think as you get in the lower mid-20s, I think you got buyers down here. Even say the low, let's even go to the low of the year, which is 27.76. I think we could test that today, and I think you'll find buyers there. So I'm not, even though the offer for CBS, and that was the wild card, is coming in below, going to be coming below market value, I don't think everybody was in this just for the potential of, getting acquired by CBS. I think there was other reasons. And the stock actually was trading, before the CBS rumors even hit, the stock was kind of trading in the 28, 29 area. So I think there's support at 28. So I don't mind the stock Viacom, especially on a valuation perspective. I don't mind it at 28 bucks.
There are just so many question marks when it comes to media M&A right now. So many. You have AT&T, Time Warner. You have Fox Disney, you have 21st Century Fox trying to buy Sky News in the UK. They may have to sell some assets to Disney to get that through regulation. You have the CBS Viacom, which we just discussed. You have everyone is involved in M&A of some kind, and nothing is done until it's done. So there's just so many question marks over the entire thing that I would say just wait it out. Let's see what happens with the Time Warner AT&T thing. That might be the first domino to fall. Their trial is going on right now. So I'm sitting all this out, and I'm just going to wait till that domino falls, and then we'll see what happens after that. But 8:34, I'm going to bring Nick Shaheen on the fly. He is the author of Create Income with Option Spreads. Joins us every Tuesday at 8:35 to give us some options plays and give us his overall view on the market, and we'll see what's happening out in California, bright and early. Nick Shaheen, how's it going?
Yes, sir.
How are you?
Good.
What's on your mind this morning? What's on your screens? We're watching a lot of breakdowns over here.
Well, small bounce this morning, and I'm watching some big candles across the mega caps just a few minutes ago. I was wondering what that was all about. Anyway, small bounce and trying to evaluate how long this headline-ridden ticker tape is going to last. We have non-farm payroll this Friday, and I don't think anybody mentioned that yet because we're busy tackling one headline after another. I mean, it's impossible how the headlines are flying, which makes homework hard. because you have to do homework on fundamentals, and then you have to do homework on what's going to fly through the Twitter sphere. By the way, if you listen to the news and they're talking about politicians, and almost every statement starts with he or she tweeted this or tweeted that. So apparently the government should buy Twitter. Like I joked months ago, they should do it because it's become the one way to reach it's the biggest soapbox on the planet, I guess. And they're using it thanks to Donald Trump, who saved this stock, in my opinion.
Just jump over to the Intel chart here. We just want to talk Intel here once again. And I was saying on the show, I think I'm going to get a shot at 42. I just want to clarify. Somebody in the chat was saying I said that this week. I don't think there's any chance Intel's going to get $42 this week. I'm saying I think I might eventually get a shot down there, and I would be a buyer down there. And then we bring Nick here in, and I'm thinking, you know what? Maybe I should play the Nick Shaheen strategy here. You think you want to own it at 42. Why not, sell the 42 puts? And I could get some premium. What kind of premium can I get for Intel on those 42 puts?
Well, I don't know off the top of my head, but we can look in a minute. But
let's look in a minute. But what are your thoughts here on Intel? Do you think I get a shot at 42?
Well, it is mathematically possible if that's what you're asking.
Anything is mathematically possible. But what do you think of the Intel chart? So I'm not going to say it. What do you think about it?
Okay, so I just posted Intel shares was along months ago on a multi-year, a decade-long rebound in a giant cup and handle matter, and this was the eyeball target for me, and I posted it way below 40. So the trade was ongoing. So if I was long on that, I'd be booking here just from the fact that, hey, I got the profit and I book. The 42 level seems like the absolute worst level of late. If you look at the chart on the shorter term. So that makes sense that you'd be a buyer there. And I guess, I'm going to guess that at 42, you're going to have to step out in time and commit, say, to September or something like that to get any premium that is kind of worth your effort. So 43 is, September is like almost $2 as far as puts are concerned. So if you're willing to commit to a leap, say to next January, at 35 you can get $1. At 40 you can get almost $1.80. At 42 you get $2.40. So in your case,
to January I get $2.40 for those puts.
Right. So if I sell 10 contracts there, I collect $2,400. But you're committed to buying 10 times 100 shares of it if it goes below it. So yesterday I was debating this and they said, well, when will that happen? I said, anytime when the stock falls below it, but in theory, it shouldn't happen until it's $2.40 below it, because you're going to, otherwise the other person is breaking even. So my break even point would be around $40, just under, if I do that. So what if I was really bullish Intel and I think it's going to rally? Then I can sell that and buy some calls, but that would make me really long Intel. So if I just wanted the opportunity to buy it at 42, I would sell the puts at 42. Or if I wanted a $2 trade, I can sell a credit put spread at 42.40 or 40.37 for $3 wide, but little safer in incident aspect, and then collect a nice premium there.
Talk the overall market here. Let's go to the Qs first. We'll just talk the techs because we were talking Intel there. What are you seeing on the tech stocks on the QQQs from a technical basis?
Well, you would have to look at one group when you're talking about that, because tech, I believe FANG is probably 40% of tech, as the Qs you mentioned. So this is the FANG gang. And they've beaten down. They're beaten down. Can they go lower? Sure, they can. I mean, Amazon is still not a bargain. Apple is a bargain, but Amazon isn't. Google and Facebook have become better bargains now. But the headlines on Facebook are real. I mean, the guy is now responding nicely, but we don't know how that's going to affect his P&L, Facebook, Zuckerberg. So although I am optimistic about their prospects from businesses, I worry about the short-term reaction in the headlines. So if Google and Facebook have that danger looming over them, Apple doesn't yet. But all it takes is one headline or somebody saying something about it, or if Donald Trump wants to battle Apple for some reason, because he still hasn't forgotten how they wouldn't open up that one iPhone at the time. So who knows? Fundamentally, they're solid. The macroeconomic environment is solid, but the headlines make it seem like it's not. So we're in limbo right here. I'm cautiously optimistic. I haven't sold big puts this week because of the headlines. So I have to manage the open positions that I have based on the headlines, but fundamentally I haven't changed my mind. They should be higher down the line given the macroeconomic environment we're in.
I look at this FANG chart that you just posted there, and I think they're showing on the show there as well. And you've got obviously a lot of lines, channels drawn there, and you get below this lower level here right now. It looks like we're taking out the lower level of your channel.
Well, that channel, the blue-red one, is simple math regression. So when somebody say reversing to the mean, going back to the mean is going back to the middle of the blue and red, but that changes with the time. This is just a daily chart. So, but if you want to think about it differently, a year ago it was a lot lower. So there's a lot of room to fall.
Okay.
So we have corrected 10% twice in the last 2 months. If I want to look at it this way, everybody wanted to retest the lows. They wanted to retest the lows. I don't think we should retest the lows just for that reason. But it's like a self-fulfilling prophecy. You get these. Almost cussed. You get these experts on CNBC that come out, and they say they aver these statements that become realities just because they are leveraged media. Just like leverage ETF are dangerous. This is leverage media. There are only a few players, if not just one, and what they say becomes reality. And everybody's looking for what 25.32. I don't know that number by heart, and I didn't even look at it at the chart because that's what they say. Oh my gosh, 25.32. If we close below that, forget it. We don't know what's below it. Just like they put deadlines in the dates. When this happens, that happens. So anyway, back to this. Yes, they're lower. They could go lower just because FANG is Amazon, really, and Facebook, and Google trades like Facebook. So it's a dangerous bunch, and it's 40% air math, to use your term, of the Qs. Now, another portion of the Qs that's important are biotechs. So you have to look at the IBB kind of to get a gauge. And that has shed a lot of froth.
Yeah.
But that also is always headline ridden. So, and also we know that Trump doesn't like them. Every once in a while he tweets, I'd like to do this and that to their pricing model. So
you got the Trump factor in there for sure on the IBB.
Yeah. So here's now that you mentioned the Trump factor, here's my thesis overall. It just like hit me yesterday. I was talking to some friends, and so what if they call him a master negotiator? What if he's causing this on purpose so he can bring everybody to the table on whatever he wants to negotiate? Everybody's nervous in a falling market, and the markets are falling globally. So if he's talking to the Democrats or Republicans or the Mexicans or the Canadians, everybody's going to listen with, hey, how can we stop this right now? How can we make this guy happy? That's just a thought.
And if you're basing anything on a perceived understanding of how somebody else, let alone Trump, thinks, I think that's a fool's errand. Question from the chat, thoughts, your opinion on Nike, Nick?
Okay, I haven't looked at it in a while, so it has fallen. But just like the IBB chart I just posted, I worry that if we continue this malaise, if we lose 63, 62, which is a pivotal point, I'll post the chart in a second, we could get down to 60 or below. Just from a technical perspective, it's not a absolute head and shoulders, but it's head and shoulder like price action where you get a couple of spikes, and the most recent one is the weakest of them all, and it's bouncing against the neckline. You don't want to lose that neckline. And right now, it's somewhere around 63-ish. You can look at it on the chart, and then there's another band that I have on my chart that's a longer-term pivot point, which will come into play. And usually those pivot points are support because whoever fought over them in the past, they're likely to come back and fight over them if we revisit them. So cautious longs, everything. This applies to everything that you like that has fallen a lot. Is I would do a debit call spread near the money and out in time, because I get these questions. How do I do it? Debit call spread. That's the least aggressive way of doing it. When? Out in time, because I want time on my side. And what level? Where? Is at the money. So I don't have to guess how far they need to bounce. If they bounce, I'm making money right away. And I don't do it for next week or this week because it's going to cost the same. So why not give yourself time?
This Nike chart looks terrible to me. I just see the little head and shoulders, kind of like the left shoulder there in January, the head up there at the earnings report, which was really good earnings, and it didn't rally on the good earnings report. Rallied and gave it all back that day. I think we had a bad tape that day. And now you look like you're breaking down through the neckline here. I mean, this looks like it's got $60 written all over it to me.
But here's a little side tip on trading anything in this headline. I usually pick a crap stock du jour and track it. So when Facebook fell, you track Facebook. If Facebook bounces that day, then the whole market is going to be okay, because they will be buying Facebook last, because it is the bad story of the day. Walmart was at one point. Amazon is now. So if you see Amazon green and getting greener and just bouncing to heck heaven, so then the whole environment should be okay. So pick rabbits, good rabbits and bad rabbits. So the opposite is also true. Let's say NVIDIA reports and NVIDIA is flying high, and then suddenly NVIDIA is the last man standing and it turns, and forget about it. Don't try any bounces. But fear is high. As long as fear is high, we're going to have selling the rips, because nobody's taking that extra step. They get to the breakout lines. They had a few yesterday, but they refused to take the step. Mainly Apple had a lot of opportunities to spike with an inverse head and shoulders, cup and handle, and intraday trades, and they didn't take the step because they're afraid, because you look at the VIX, that represents their fear.
Nick, I got a couple other charts here for you too. What about the airlines? The airlines have been, massacred here. From a valuation perspective, some of them are starting to get attractive. I mean, I look at a Spirit Air, it's went from 44 to $36 in like 7 trading sessions, so that is murdered. LUV, which is Southwest Air, had a terrible day yesterday, breaking down. It's still kicking around support of $54, but ugly chart. I mean, these all look the same. American Airlines broke down yesterday. UAL broke down yesterday. Delta, UAL looks like a head and shoulders. Delta had a horrible day. Airlines are in rough times here right now. What are you seeing on the technicals?
I am long UAL, and I'll post that chart. I've sold puts at 50, and
way out though.
Yeah, months ago, and I collected $5. I think now a little over $5, I think, and now it's like $2 ish. I thought about trimming a little bit. I did trim along the way, but I still have quite a few, so I may trim that. But you mentioned Love, and that is Southwest. Yeah. It is looking. These are weekly charts I'm posting. So if I was long, Love is the momentum of them. So
Love's always been kind of best of breed.
Right. It gets a premium because it behaves best. I like the fly them better than all of the other ones you mentioned. But it is technically looking vulnerable. You mentioned the head and shoulders. I can pick one out right there just without drawing it. So 50 is feasible, and it wouldn't be a game changer. But if you look to the left at the 50 level, that's a pivot point. It had 3 times where it failed in 2015 March, back in 11 of 2015 again, and then April of 2016 it failed to break out and finally broke out above that level in 2016 November, which was after the election, I believe. And since then, it hasn't revisited. So it is a pivot point. So if we get to 50.47.5, what will happen there? Will that be forward support because it was prior resistance? So if I'm selling puts and I'm short puts below that level, I'm breathing okay. If I'm short puts at 52.50, I may want to defend it somehow.
Let's move to a stock that we talked about earlier on the show, but that everybody's still talking about right now, and that is Tesla. I mean, Elon Musk has some crazy tweets there over the weekend. The April Fool's joke that obviously nobody appreciated. I don't know what he's thinking sometimes with his Twitter account. He'd be better to get rid of his Twitter account because the stuff that he tweets doesn't help.
It's funny.
It's kind of funny. It's amusing to me, but if you're a shareholder of that,
no, it's irresponsible.
And he's tweeting about the company being bankrupt.
I'm not a shareholder, so I think it's funny.
You're tweeting about the company being bankrupt. I mean, sure, you're mad. The media is, there's people that are talking that could happen. I mean, it just seems nonsense, and that's what he was making fun of, that it's nonsense. But at the same time, we know they need some capital there. They don't need another capital raise here. Stock has been breaking down and technically broken here from 300 and still, trying to find its home. What are you thinking on the Tesla?
Okay, so they have an event this week, right? They need to announce that number of Model 3s. So let's start there. The options market is pricing in at like a $20, $21 move this week, even still, because of that event. So the whisper number is 2,000. I still have seen only 2, and I live in Tesla land. And I don't know where they're delivering these, but it's not in my neighborhood. And so that's a big risk. So right now, it's a complete coin flip as to what that number comes out and how people react. I believe the number should have been 2,500, and the whisper number is that it's not. It's like 2,000. God help the stock if it's below 2,000, because then it may cause another reaction down. If that dip that just happened was based on borrowing, which, by the way, the writing was on the wall. I did videos on it, and I can't remember how far ago. And I said, the one big worry is in a rising rate environment, it might not be easy for Tesla to borrow money, and it will go out of business without being able to borrow money because they burn through cash. So it is he was joking about a really serious matter. I don't know if it was childish, lost in translation, or he was drinking something. I'm not sure.
Childish. He's like a child a little bit. He's a genius, but at the same time,
I don't know if he is a genius. You see, I say it, and I get haters out there. He's obviously smarter than me because look at him and look at me. But he's a risk taker for sure. But some of his comments make me think that he wears tinfoil hats. So it just, I don't know.
Mars and,
So last week, a couple of weeks ago, we have people on your show that are friends of mine, and they asked me, they said they were thinking about it because they sell puts. And I said, ooh, that's one put I do not want to sell it here because not only have to worry about the market in general, but I know that they had that number that was due here, and also the borrowing cost issue, because it is a serious fundamental issue. I only sell puts in things I know I can own and make money over time in the worst case scenario, like a bank that's selling at 1 times book. Yeah, I would sell puts in that all day long. Because worst case scenario, I'll own the bank very cheap. Same with Apple, etc. But in Tesla, I don't know that is the case. So worst case scenario, I own toilet paper, basically. So so in this case, I would rather wait. The only way I would sell puts in Tesla is some sort of selling a calendar for a trade with tight stops, meaning I sell a put out in September, say at $140 level, but buy put spread or puts shorter term to try to short it for free.
You know what my concern always is, and my one friend makes this point all the time on Elon Musk, is that he doesn't care about making money. He's not about making money. He's about changing the world.
Oh my gosh, I don't buy that for a minute.
You don't think he cares?
No, he's making billions. Are you?
Well, he makes a lot of money, obviously, but I don't think he's in it for the money. You think he's in it for the money? I kind of agree with that.
Everybody's in it for the money.
He wants to die on Mars. He's trying the SpaceX program and stuff. I don't know. You think he's all in that for the money? I think he's just trying to change the world. That's a good thing, actually, but that's the case. But not.
How is changing the world? I don't understand this. Am I the only one that
sees it? The space program, it looks like.
Well, changing the world. I was thinking more like the fossil fuel thing because.
So I shouldn't say because he's trying to get outside the world.
Okay. Well, it's people like him that put us on the moon and underwater and holding cell phones in our hands and computers in our hands. So I appreciate that. But when it comes to you don't make a joke like that when people are suffering at your stock's hands. So now there's a gap above Tesla on the daily. So that's upside magnet for people that love to close gaps. So for a trade, I would buy a debit call spread or calls in Tesla, meaning I know that I'm going to risk X, and if X goes, it's not going to break my piggy bank for a trade but it's a coin flip trade. So Vegas, so go down to Vegas and lay it down on red or black and let the roulette ball go and land on whatever, because that's how it's going to happen. The headline is going to come out, number is whatever. And the reaction is going to happen to that headline, and we have no clue how it's going to go.
We always ask you, our tickers, what do you have? What have you been looking at here that you've been putting on recently? What chart setups do you like here right now?
Well, I like banks and I like the mega caps. I'm even long Amazon, and I would sell puts and go long Facebook to as a trade. I've also short the TLT via long the TBT. Basically, I'm saying rates are rising. Why are they falling through the toilet? So on February the 2nd, this whole thing started from spiking rates. The TNX basically represents the 10-year. Oh my gosh, it's going to hit 3. And the markets fell off a cliff. That's what started the whole thing. And since then, the rates have plummeted. Yesterday, they were crashing. And that's what caused so you see the confusion? Everybody's confused. So the going long interest rates is what I did by shorting the TLT, which are bonds. But I'm not shorting them in the sense where like I think they're dead, like all the experts are doing. It's just for a trade, shorting them from their current level to like some other lower level in the future, in the short-term future. So I just posted the 10-year representation of the yield. So you can see how it's falling off a cliff. And this is a rising rate environment.
All right, we've been on the line with Nick Shaheen, author of Create Income with Option Spreads, joins us every Tuesday. Nick, thank you so much for the time today. Have a good one out there. We will talk to you again on Tuesday.
Great show. Thank you.
All right. 8:56 now, almost 8:57. Dennis, any final thoughts on this market as we wrap
We're
up?
rallying more. We've rallied about 50 cents since we started the show here. I still think this market rally is going to fade, and I think we could actually test yesterday's close, and I think we could end up going red here on the day. I just think there's some nervous Nelly still out here. So I'd be using, if I'm, as a trader here, what I'm doing, I'm probably going to be using this rally to maybe initiate some shorts or, to sell out of some of my longs. I think there's still, I don't think we're out of the woods here by any means. There was a lot of technical damage done yesterday there too. Yes, these little, market rallies and bounces can be wicked, and we do have a lot of volatility. So obviously you still have to do is protective stops when you're doing anything. You want to know where your out is, but that being said, I think I'm still tending to sell the bounce as opposed to buying the dip in this market.
We just got Redbook for the first 4 weeks of March, up 0.4% month over month, up 3.5% year over year. Retail sales, that is, we do have auto sales. Monthly auto sales due to come out later this morning at usually it's around 9 or 9:30. GM did come out yesterday and said they're not going to give monthly auto sales anymore, and they're going to give quarterly auto sales. So I don't think we'll get GM today, but I'm expecting we will hear from Ford and Fiat Chrysler sometime this morning with regards to their March figures.
John Roberts has tweeted at me. He wants opinion on PVH. So he just wants to know what we think of the technicals on PVH. I mean, this has been an unbelievable retail stock. You want to talk about a lot of your retail stocks we know have been killed, not PVH. Obviously, they're one of the makers of the apparel, so they can sell that stuff. It's not like they're being affected by the big box, stores going down, the big box department stores and being Amazon, because they can sell their stuff on Amazon. So PVH has been one of the best stocks. It was $90 at the beginning of 2017. Here we are just over a year later. We're at 150. You find me a retail stock that has performed this well. So this stock has been, a great stock. Now, shorter term technical basis, we do have a gap in the chart there. And I think, was that earnings last week? I know goldfish memory for me here, but we had the big gap up there on Thursday. Did they report PVH, on Wednesday night?
Yeah, they had earnings. Good call. Wednesday night.
So there's a gap in the chart here. We held yesterday's gap to a certain extent. We only broke, the previous day's low by 19 cents, which is, for all intents and purposes, is a double bottom. Got to hold that. We don't want to start cutting through 149.81 because then you think we're going to fill the gap down to 145. It's a tough tape, but this one is kind of best of breed in this tough tape. So I think if I'm long and I'm sticking with it, and as long as it's holding above that gap, that's good news. So we'll see what it can do today. It's a big day for it. Can it hold above that 149.81 low from yesterday where you kind of got the double bottom? If not, we could fill that gap. But even if we fill that gap, you got all kinds of support. So I guess it depends on your time horizon too. But you all got all kinds of support. 140. 145, maybe you could argue too, because that's where we gapped up from. So as getting lower 140s, I think there's buyers all over the place. So this one, has been one of the best stocks, and I don't see any reason why it's going to change in the near term.
One more from the chat. Lulu.
I mean, again, same story. It's been one of the best retailers, and maybe it's your apparel makers. They obviously do have stores in the malls as well, but Lululemon has been unbelievable too. And there's a stock. Yes, it was an ugly candle yesterday, but everything was ugly. But you're looking at a stock that's been an unbelievable performer too. Talk about a comeback. Nothing has come back more than Lululemon. You were up here, 2013, 2014, 2016. You're up in the 80 handle. We know in 2017 I had a rough time. Got down to $47. Came all the way back, making new all-time highs here again. So if you got to put a gun to my head, which stocks do I want to own? It's stocks like Lululemon and PVH that are still sitting up near highs and still, obviously not as affected by, let's say, you look at Macy's and you look at the other big box retailers that have been affected by Amazon. So Lululemon hasn't been affected nearly as much. I was actually in the Somerset Mall 2 weeks ago. That Lululemon store was packed. So packed, it's a small store. It was like 50 people. They came and moving those things. So there's still people buying Lululemon clothing.
All right, that's going to be it for us today, folks. Hope you enjoyed the show. You can catch the podcast on iTunes, SoundCloud, and Stitcher, or go to YouTube and just rewatch the show there. Thank you to Nick Shaheen, who joined us today. Thanks to all of you who hopped in on premarket.benzinga.com and on our YouTube chat. Tomorrow, we are joined by Jeff Hirsch, author of the Stock Traders Almanac, expert on seasonality. So he'll be able to break that down for us on tomorrow's show. He'll join us at 8:35. Hope you all have had a good morning and you have a good rest of your day. We'll see you folks on Wednesday. And we're done.